right, so welcome to the deep dive. You know how this works, right? We take a whole bunch of information,
Yeah.
try to boil it down to the good stuff and get you up to speed
Love it.
fast, you know? So today we're diving into Get Rich Carefully by Jim Cramer.
Oh, interesting.
Yeah. So you probably know Cramer from CNBC.
Right. Mad Money.
Mad Money, yeah. So the guy's been on Wall Street forever.
Right.
Decades and decades. And this book, it's all about his strategy
Okay.
for trying to hit those high returns in the stock market.
Right.
But doing it, carefully, minimizing the risk as much as possible.
Makes sense.
Yeah. And his big point is you got to start now.
It's funny because when I first saw we were covering this book, I thought, oh, Jim Cramer, isn't he like the buy guy?
Right.
Always super bullish.
Yeah.
But Get Rich Carefully. It's kind of got this different vibe to it, doesn't it? Like, it's more nuanced than that.
Yeah, totally.
I mean, you start reading, and it's pretty clear. He's got this core idea that stock investing doesn't have to be this crazy gamble.
Yeah, it's not all like, YOLOing your savings into meme stocks or something.
Exactly.
Yeah.
He pushes back against this idea that big rewards automatically mean you got to take huge risks.
Right. And I think that's something a lot of us can relate to, right? Like, even thinking about investing in stocks can feel kind of, I don't know, intimidating. Like there's this hidden danger lurking everywhere.
Yeah, for sure. It's easy to get spooked.
Yeah.
Especially when you see those headlines about market crashes or whatever.
Exactly. So what we're going to try to do today is really break down Cramer's kind of main principles for navigating all of that, navigating the risk in a smart way.
Okay.
So we're going to look at how much emphasis he puts on research.
Right.
His ideas about managing risk, why he thinks the long-term view is so important,
Uh-huh.
and even things like how to understand what's going on in the bigger economy. All those macro trends, even how things like mutual funds fit into all of this.
Yeah.
And of course, we got to talk about our emotions, right? Fear and greed, those classic companions.
They never leave you alone, do they?
No, they don't. All right, so let's get into it. What's the foundation? What's the basic approach that Cramer lays out in Get Rich Carefully?
Well, at its core, I think Cramer's saying that going for strong returns and managing risk well, those two things aren't like opposites in stock investing.
Okay, interesting. So you can have both.
Yeah, you can't. The key, the way he sees it, is having a disciplined strategy. You've got to be methodical. It's not about trying to get rich quick or jumping on the latest hot stock tip.
Yeah, no chasing ambulances.
Exactly.
So does that mean this approach only works for a certain type of investor, like someone who's already really cautious or something?
Actually, I think that's one of the really cool things about this book. Cramer makes it clear that understanding the markets is crucial for anyone who wants to invest. Whether you're someone who's, really risk averse or you're more comfortable with a little bit of a roller coaster ride.
Yeah, that makes sense.
And the thing is, he doesn't shy away from the psychological stuff.
No, not at all. Right from the get-go, he talks about greed and fear.
Yeah.
Straight up acknowledges that these emotions are always going to be there, lurking in the background, influencing our decisions.
Totally. He's basically saying, look, these feelings are totally normal, but if you let them completely control you, you're going to make bad choices.
It's like, that feeling when you see a stock going up and you think, oh man, I got to get in on that.
FOMO, fear of missing out.
Yeah, exactly. Or on the flip side, when things start going down and you just want to bail, cut your losses and run.
Yeah, panic selling. Classic.
Classic. And what's interesting is he doesn't say you got to completely eliminate these emotions, which, let's be real, is probably impossible anyway.
Totally. It's more about recognizing them. Understanding where they're coming from, and then using a smart, knowledgeable approach to investing to kind of keep them in check.
So don't ignore them, but don't let them drive the car either.
Exactly. It's about being in the driver's seat.
Okay, so let's get down to brass tacks here. Where does Cramer say we should be looking for these, for these investment opportunities?
Well, he lays out these 7 evergreen themes.
Evergreen.
Yeah, evergreen. Like things that he thinks are going to be relevant for a long time. They have this potential for solid returns over multiple years, not just a flash in the pan.
Okay, so these are his big picture bets.
Exactly. And the first one is new technology.
Okay, so AI, crypto, all that stuff.
Well, he specifically talks about mobile, social networking, and cloud computing. So yeah, there's overlap there.
Right.
But what's interesting is he emphasizes the kind of the underlying technologies, the infrastructure that makes all the digital stuff possible.
Ah, so it's not just about, like, the latest gadget.
Right. It's more about the foundational stuff that's enabling all this growth.
So focusing on the picks and shovels rather than the gold rush, kind of.
Exactly. Smart. Okay, so the second theme is all about looking good and feeling healthy.
Oh, the wellness stuff.
Exactly. So think about beauty products, health supplements, fitness tech, that kind of thing. Cramer thinks this is a trend that's only going to get bigger.
Yeah, I can see that. People are always going to want to look and feel their best. All right, what's number 3?
Number 3 is what he calls the newfound virtue of value. Basically, he's talking about companies that are like fundamentally solid, they have good businesses, but maybe the market hasn't fully recognized their potential yet.
Okay, so they're kind of like under the radar.
In a way, yeah. They're maybe undervalued, and Cramer thinks there's a chance to make some serious money by getting in early on these companies.
All right, so we've got tech infrastructure, wellness, and undervalued companies. What else?
Okay, so theme number 4 is companies that are growing through acquisitions. So they're buying up other companies, getting bigger, and ideally creating these synergies where the whole is worth more than the sum of its parts.
Okay, so they're kind of like consolidating their industries?
Right.
All right, what about number 5?
That one's cool. He calls it stealth tech.
Stealth tech.
Yeah, basically it's innovation that's happening in industries that you might not immediately think of as being high tech.
Hmm. Interesting. So, like what? Give me an example.
Okay, so think about like agriculture. There are companies out there using really sophisticated technology to optimize crop yields. Things like sensors and data analysis.
Ah, so not your grandpa's farm anymore.
Not even close.
Yeah.
All right, number 6 is new pharmaceutical and biotech companies.
Makes sense. There's always new breakthroughs happening in medicine.
Exactly.
Okay, so that's 6 down. What's the final evergreen theme?
The last one is the American oil and gas renaissance. So he's talking about the boom in domestic energy production, things like fracking and shale oil.
Okay, so a lot of ground to cover there with those 7 themes.
Definitely. A lot to dig into.
And then he also talks about something called the breakup trade. What is that all about?
This one's a bit more specific.
Okay.
The idea here is to identify companies that are planning on basically splitting themselves up into 2 or more separate companies.
Interesting.
And Cramer says that if you get in on this kind of early on, there's a chance to see some really big gains. He even talks about like potentially quadrupling your money.
Whoa, 4 times.
Yeah, it's not guaranteed, of course, but he thinks the potential is there, especially if you understand the different stages of a breakup.
Okay, so how does that work? What are the stages?
Well, first, you have this kind of like speculation phase, right? The market starts buzzing with rumors that a company might be thinking about splitting up.
Yeah.
Then stage 2 is when the company actually announces, hey, we're going to do this. We're going to split.
Official announcement. Okay.
Yeah. Stage 3 is all the nuts and bolts of actually separating the different parts of the business.
Right.
And then finally, stage 4 is when those new independent companies start trading on their own.
Got it. So it's almost like instead of investing in one big company, you're investing in like the potential of these smaller, more focused companies that emerge from the breakup.
Precisely.
But timing seems pretty crucial here, wouldn't you say?
Oh, absolutely. Cramer really stresses that. He says you need to be able to spot these breakups early on and understand how each stage might impact the stock price.
So you got to be in the know.
You got to do your homework, yeah.
Okay, so let's say we've done our research. We've identified a promising sector. Now we've got to look at the companies themselves, right? And one of the things Cramer talks about is bankable management. What does that mean exactly?
This is actually one of the things I found most interesting about the book.
Yeah.
Cramer argues that when you're buying stock in a company, you're not just investing in like their products or services.
Right.
You're investing in the people who are running it, especially the CEO and the senior leadership team.
Ah, so it's not just about the what, it's about the who.
Exactly. And by bankable management, he means leaders who've got a solid track record of success.
So they've proven themselves.
Yeah, but it's not just about past performance. Cramer's also looking for leaders with, like, strong character, ethical, trustworthy people.
As integrity, yeah.
Right, and they need to have a clear vision for where they're taking the company.
So it's not just about being a good manager, it's about being a good leader.
Exactly. Cramer really believes that the quality of the management team is a huge factor in whether a company succeeds in the long run. Their decisions, their ability to navigate challenges, their overall credibility, It all matters.
It's almost like you're not just buying stock, you're kind of betting on the jockey, not just the horse.
That's a great analogy. Okay, so we've got these 7 evergreen themes. We're looking for bankable management. But then Cramer also zooms out a bit and talks about macro trends and like government policies.
Yeah, the bigger picture stuff.
Exactly. So what he's saying is you can't just analyze a company in a vacuum.
Right.
You have to think about the overall economic environment too, because that's going to impact how well the company does. He talks about things like, economic growth, interest rates, inflation, all those kind of macro factors.
Right, the stuff that affects pretty much everything.
Exactly. And it's not just about the U.S. economy either. It's global.
So you got to think about, like, what's going on in China, Europe, all over.
Yeah, for sure.
So it's like first you zoom out and look at the world economy.
Mm-hmm.
Then you zoom in a bit and focus on the specific industry or sector that the company's in.
Right.
And then finally, you zoom in all the way and look at the individual company.
Exactly. It's like those maps where you can like zoom in and out to see different levels of detail.
Makes sense.
And he even talks about how, things like government policies can have a big impact, even on companies that are otherwise really solid.
Okay, like what? Give me an example.
Okay, so interest rates. If the Federal Reserve decides to raise interest rates, that can make it more expensive for companies to borrow money.
Right.
And that can potentially slow down their growth.
So it's like a ripple effect.
Yeah, exactly. It's all connected. But even though these macro events can cause a lot of volatility in the market, Cramer's advice is basically, don't panic. If you've done your research and you believe in the company, don't let short-term ups and downs scare you off.
Stay the course if the fundamentals are still sound.
Exactly.
Okay, so we've got a lot to think about here. Macro trends, government policies, industries, individual companies. But there's one thing that Cramer really hammers home throughout the entire book, and that's the importance of research.
Oh, absolutely. He's adamant about this. There's no substitute for doing your own homework.
And what does that homework look like, according to Cramer?
Well, it starts with understanding the basics, right? What a stock actually represents, what the price means, what market cap is. That's basically the total value of all the company's shares out there. But you can't just stop there. You got to dig deeper.
Okay, so it's more than just reading the stock ticker.
Way more.
Yeah.
You got to understand the company's business model.
So like how they actually make money.
Exactly. How they generate revenue, what their expenses are, what their profit margins are, all of that. And you also got to look at their financial statements.
Yeah.
Their earnings reports, their balance sheets, all that good stuff.
And he's not saying just look at one number in isolation. Like, it's about understanding the bigger picture, how all the different pieces fit together.
Yeah, exactly. He says you need to consider all the different factors that could affect a company's stock price and, try to put all those pieces together into a coherent story.
It's like being a detective almost.
Totally. Gathering clues, piecing together the evidence, and he even suggests, seeking out expert opinions, reading analyst reports, things like that.
Yeah.
But then you got to synthesize all that information yourself and come to your own conclusions.
Okay, so it's not just about blindly following what the experts say.
Right. You always got to think for yourself.
And his focus on research, it's not just limited to the fundamentals, right?
No, he also talks about technical analysis.
Yeah.
Which basically it's looking at patterns in the stock price over time, using charts and other tools to try to identify trends and potential buying or selling opportunities.
Okay, so it's more about like the timing of your investments.
Yeah, exactly. When to get in, when to get out. But he cautions against trying to time the market perfectly, trying to buy at the absolute bottom and sell at the absolute top. He says that's practically impossible.
Yeah, I've heard that before. Time in the market beats timing the market.
Exactly. It's more about recognizing patterns and trends, using those insights to make informed decisions about when it might be a good time to buy or sell.
And ultimately, his big message about research is that ignorance is not bliss when it comes to investing.
No, not at all. He makes it clear that not doing your research can cost you a lot of money.
It's almost like, you wouldn't buy a car without doing some research, checking the reviews, comparing prices.
Exactly. Investing should be the same way. You got to know what you're getting into.
All right, so let's say we've done our research. We found some promising companies. We invested. What's next?
Well, this is where the patience comes in.
Patience.
Yeah. Cramer is a big believer in taking a long-term perspective when it comes to investing. He says you got to be in it for the long haul.
Okay, but why? Why is that so important?
Well, for a couple of reasons. First, he argues that holding on to investments in solid companies for an extended period allows them to really reach their full potential. He says that over time, good companies tend to grow their earnings, their revenues, and their stock prices.
Right.
But the other big reason is that it helps you avoid making emotional decisions based on short-term market swings.
Ah, so it's about, like, not panicking when the market dips.
Exactly. The market's always going to go up and down. It's volatile. But if you're focused on the long term, you're less likely to get spooked by those temporary fluctuations.
It's about, like, seeing the forest for the trees, right?
Yeah, exactly.
And that can be really tough, especially when you see your portfolio value dropping and you're thinking, oh man, I got to get out before I lose everything.
Yeah, that's that fear kicking in again.
Exactly.
But Cramer's point is that if you've done your research and you believe in the companies you've invested in, the best thing you can do is often just ride out those storms.
Okay, so long-term perspective, stay calm, don't panic.
Exactly.
But he also acknowledges that, not everyone has the time or the inclination to do all this research.
Right.
Some people just want a simpler approach.
Yeah, and for those folks, he talks about mutual funds.
Okay, so mutual funds for people who don't want to, like, pick individual stocks.
Exactly. Mutual funds are basically these baskets of stocks that are managed by professionals. So you're kind of outsourcing the stock picking to someone else.
Okay, so it's a more hands-off approach.
Yeah. And there are all sorts of different mutual funds out there, some that focus on specific industries, some that focus on specific countries, some that are more conservative, some that are more aggressive. So you can find one that aligns with your risk tolerance and your investment goals.
Got it. So it's like you're still investing in the stock market, but you're not having to do all the individual company research yourself.
Precisely.
And ultimately, Cramer's big message throughout the book is it doesn't really matter whether you choose individual stocks or mutual funds.
Yeah.
The most important thing is that you start investing now.
Absolutely. Time is your greatest asset.
Time in the market beats timing the market.
Exactly.
Okay, so that was a whirlwind tour through Get Rich Carefully. A lot to unpack there. But let's try to summarize the key takeaways, the big things Cramer wants us to remember. First and foremost, research, research, research.
Yeah, couldn't agree more.
Yeah.
You've got to do your homework.
Understand the company, understand the industry, understand the macro trends, understand everything. Then manage your risk. Don't put all your eggs in one basket. Diversify, spread your investments around.
Absolutely.
Think long term. Don't let short-term market swings freak you out.
Stay the course.
And then find an approach that works for you, whether it's picking individual stocks or going with mutual funds.
Whatever gets you in the game.
Exactly. And that's really Cramer's big message, isn't it?
What is that?
That investing doesn't have to be this scary, intimidating thing.
Right.
If you approach it carefully, thoughtfully, with a plan, it can actually be a really powerful way to build wealth over time.
And it can be kind of exciting too,
Yeah.
Like you're participating in the growth of these amazing companies, these innovations that are shaping the future.
Yeah. I mean, when you think about it, investing is kind of like, you're placing a bet on the future.
That's a great way to put it.
And speaking of the future, thinking about all those evergreen themes that Cramer talked about, tech, healthcare, value investing, which of those, like, really jumps out at you as, like, the most promising?
Ooh, that's a tough one. They all have their own appeal. But if I had to pick, I'd probably say the stealth tech thing.
Yeah.
It's just so intriguing to me, the idea that innovation is happening in all these unexpected places. Like, it's not just Silicon Valley anymore.
Right. It's happening everywhere.
Yeah, and I think there are probably some really great investment opportunities out there if you're willing to dig a little deeper, look beyond the obvious.
Absolutely. And that's a perfect note to end on, I think. Keep Cramer's advice in mind, do your research, think carefully, and who knows, maybe you'll uncover the next big thing.
Maybe we all will.
That's why.
Happy investing, everyone.
Happy investing.